because I'm convinced as a fund manager that there is a future growth potential. All of this is all bordering actually on the fund manager's own wisdom, knowledge, analyst team, and the way the fund is managed. So for a retail investor, for any investor to deep dive, particularly into any particular stock, is very, very difficult in today's date. Ideally, one should invest with stable, diversified IT funds, which have a proven and a consistent track record. One could look at the fund's own Sharpe ratio, the Turner ratio, to understand how the fund would perform.
Okay, that's interesting there. And leave it to the fund manager, but a lot of ratios that you can keep an eye on also when you're judging it. Sanchita, thank you so much for joining us today on the show and giving us an insight in terms of, whether momentum funds, IT funds, what we should be looking at over there. Thank you so much for joining us. And viewers, thank you so much for tuning in as always. Don't go anywhere. Our sort of trade is still there, so you have closing bell up next.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Asian markets are giving us an indication it's a bit of a mixed opening there.
All the participants' views will be taken into account by SEBI before taking any action.
To improve the capacity of the brownfield shipyards so that they can, they get about 25% subsidy.
30 points lower is where we are at.
The US, of course, the story is still very much driven by your earnings growth in the AI investments.
Because of the production pause, daily impact for JLR was £5 million per day.
25,025 is where the Nifty is at.
Markets will be looking forward to the next quarter, the third quarter earnings, where the spillover effect will be visible.
There is a lot of, research happening on how can you use this to automate.
The bulls are fighting tooth and nail to protect that 25,000 mark on the Nifty.
CDMO opportunities for Indian players is very huge.
This is expected to support an overall investment of 4.5 lakh crores over the next 10 years.
Some intraday recovery, but the trend of the day has been that every intraday recovery that's been taking place is being sold into, but a very, very narrow range for the Nifty so far.
Indeed, and as we speak, it's 100 points down on the Nifty and we're below 25,000. That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza. Nigel, we were hoping 25,000 marks holds on, but it's looking tough now. But we've got the monthly expiry.
Well, that's right. Actually, at a very, very crucial juncture right now, Reema, because we're at the 20 MA on the Nifty, and you want this level to hold out. Getting into the expiry, the monthly expiry, as you pointed out, and if you break that 20 DMA decisively, that's what could make the bears a little bit jittery. So I'll have to keep an eye on that. The only good news today is the Nifty Bank, at least, is holding one end up. But otherwise, it's going down as a bit of a disappointing trading session because we are seeing intraday bounces, but those bounces are getting sold into. That 20 DMA cannot get broken decisively on a closing basis. Important point to track.
Indeed. So as we speak, it's 24,950 on the Nifty. The 20-day moving average is approximately about a couple of points lower from where we are right now, 24,945. Sensex down 326, 81,400. And the chart will tell you we had a flat opening, but thereafter markets have been grinding lower. Very minor pullbacks of 20, 30 points have been sold into. And we're now headed for the fifth consecutive session of losses. And this week, the Nifty is down about 1.5%. The mid-cap index is down close to more than 2% with a negative advanced decline ratio for the day. Let's tell you what we have for you on our show today. It's a weak trade on Dalal Street. The Nifty has slipped below 25,000. IT sell-off continues. Autos, realty sector also come under pressure. Metal stocks, on the other hand, they surge in trade as prices of commodities rally. Hindustan Copper is the top mover after copper prices hit a 2-month high. Stocks of shipbuilders are also on the move after the government unveiled a shipbuilding development scheme worth 45,000 crore rupees. All this and more lined up in the next 1 hour. For now, let's head over to get in some closing strategies. Okay, before that, let's address the big stock of the day, and that's Tata Motors, still down close to about 3%. Sudarshan is now joining in. Sudarshan, earlier this week, we heard about the cybersecurity attack. But at that point, the market didn't react. And now we learn that they've been slapped with this $2 billion pound hit because it wasn't insured.
So we had earlier reported about the impact that company might face due to delay in the production. But now, as per the several reports, and Financial Times reported majorly today early in the morning that because of the company not having insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And that is in addition to the daily impact that company has been facing of £5 million because of production delay. So this is the main reason over the last 2 sessions, you have seen a big fall in the stock. In the last 2 days, it's down almost 6 to 7%. Now, if you take a look at the timeline of this cyber attack and post that company's comments. So cyber attack happened on 31st of August. First comment company made on September 2nd saying that it's looking into the issue and will be restarting the production very soon. And after that, second statement came on September 10 talking about that some data might be impacted because of that. And after the latest statement came on September 23 in which company has said that it has extended the production pause till October 1. And on the resumption of production, it has said that it will be resuming in a phased manner. Now, if you do a simple calculation, So 2 billion pounds impact because of no insurance coverage, 5 million pounds daily impact because of the delay in production. So it's 2 point almost, if you do the calculation, it would be much higher than the profit after tax that company reported for FY25, which was 1.8 million pounds, 1.8 billion pounds. So that would be more than that. Now, why this is important for Tata Motors? Because JLR forms nearly 70% of total consolidated revenue for Tata Motors. Now, apart from the cyber impact, there was another news came that is attributing to Guardian. It is said UK government is looking to resolving this issue. How? It's considering several options. One of the options is that UK government will buy parts from suppliers to JLR, and once JLR resumes the production, it will supply it back to JLR. In that way, it wants to help the government. Now, JLR CEO has replied to UK Parliament committee in which he has said that Tata Group is in close touch with JLR to offer advice and support, and JLR has already paid 5 billion pounds and is in good position to secure any additional liquidity if it is required. On cyber tech impact, he has said it's premature to comment anything on that. We'll have to see how exactly it pans out. But as far as stock is concerned, it remains under pressure.
Okay, all right. Thanks a lot for that, sir. Clearly, the stock under pressure. It's come out drastically from the recent peak, but that's the big update that Sudarshan has been telling us all through the morning. Deven Choksi, the MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good afternoon. Good to see you. When Tata Motors, it was a darling, right? I remember during COVID, it went down to sub 100 rupees. Then it went dancing away to around 1100 rupees. But the troubles of late are not stopping. And these sort of hits are making investors very, very nervous. What's your view at around 650 rupees?
And Nigel, good afternoon. Well, I think everything is in price. Investor sentiment is negative. I think it is in price. The company sales getting affected, it is also in price. Maybe I think the impact on the margin would come in the September ended quarter. That also appears to be in price by and large. Because I think on the whole, the business of the company, sale and accept this kind of a situation, I think is not looking bad at all. On the contrary, I think with good amount of clarity coming on the tariff front, including for the European region, I believe that I think the companies like Tata Motors with a portfolio of new vehicles, including electric vehicles in JLR as well, in particular Jaguar and Land Rover coming up thereafter, I believe that I think the company is in a good position. Maybe I think the knee-jerk reaction had to happen, which has happened in the price. Could be, I think, a buy opportunity if market gives further downside into the stock.
Deven, before you go out and buy, because at a time when Maruti is at a fresh record high, M&M is almost there and it's had a fantastic run, Tata Motors is about 33% away from its recent highs. So it has underperformed, or it's come off quite a bit. So how much lower? 665 is the current market price. Would you look to buy it at 650? Would you look to buy it even lower, say maybe closer to 600? Do you see it headed down?
Yeah, Rima, I think the company has also been trying to arrest this particular situation. And I think 3 different statements coming in the span of last 2-3 weeks, I think is also suggesting that I think the last statement which came in for October 1 postponement of the business has created more nervousness. I don't think that I think beyond that point, I think the nervousness is there. So if one is looking at, I think the price target, in my viewpoint, I think in the normal market condition, given the current valuation at which the stock is quoting, I would think that I think everything seems to have discounted. Anything further fall into the stock price could be an accumulation opportunity on a gradual basis.
Got that. Today, Minda Corp is flat after yesterday's up move. The stock is holding on to gains. Remember, it rallied very hard yesterday, double-digit gain on the back of the Vision 2030 up move. But let's get you a CNBC TV 18 exclusive now. Sources are telling CNBC TV 18 that insurance companies could be looking at cutting commissions. Yash is now joining in. Yash, you were just telling us yesterday that the IRDAI was sort of in discussions with insurance companies, telling them commissions are high. Look at a model which is similar to the mutual funds with a capping of the total expense ratio. What have you heard back from the companies now? What are they planning to do?
Well, yesterday it just coincidentally happened that we were told by our sources, a development in terms of the discussion between the regulator and the insurance CEOs when it comes to the concern around high commission cost, high distribution cost, and how that needs to come down. In a separate development, the two are not related, but move towards the same direction. After the GST changes, which the government had announced, putting GST on health insurance to exempt category from 18%, we understand all insurance companies have passed on the benefits of that entire 18% GST cut to the policyholders. What that means is there is, according to our sources, a hit of anywhere between 5% to 8% in terms of additional cost for insurance companies, depending on how big their retail book is. Now, what we've been told by our sources is that the chief distribution officers of all large insurance companies have been discussing, have been talking since the last few days. And the idea is how this cost can be shared with distributors like web aggregators, like banks, like insurance agents. And that is because commission is still not exempt, though reinsurance is exempted, but commission is still not exempted from GST, and hence the cost burden being passed on to various kinds of distributors. What we've been told by our sources is that the insurance companies are looking at passing on, or rather cutting commissions by about 5 to 8% when it comes to the commissions that they pay to web aggregators, banks, as well as individual agents. What we've been told by our sources more specifically is that the pass on of the commission cost to agents as well as banks will be much lower, but the pass on to web aggregators could be much higher, because agents are proxy employees in a way for insurance companies, and hence the pass on of the additional cost of this 5 to 8% reduced commission could be much higher as far as web aggregators are concerned. Now, this decision will be communicated to all distributors by all insurance companies collectively, and that, according to our sources, could happen very, very soon. Importantly, one of the only web aggregator listed, Policybazaar or PB Fintech, has indeed a large proportion coming from health insurance, about 20% of its revenue as well as 60% of its value. Of course, will impact all web aggregators, but the listed one in this space is certainly Policybazaar. We've written to Policybazaar on this query, but a response from them is still awaited.
Okay, all right, got it, Yash. Thanks very much for that. So, insurance distributors, perhaps for them, it could be slightly tougher times if these caps do come into place on commissions, and overall, a reduction in commissions as well, as Yash has been reporting. Let's take this up with Devin. Devin, hi, good afternoon. Surbhi here. Policybazaar, PB Fintech, what's your sense? And if indeed there are some caps or any kind of reduction in commissions paid out to an aggregator like PB Fintech, does it impact the model itself in a big way, or do you think it will be a more or less a pass-through?
Yeah, good afternoon, Survi. A lot depends on how much percentage cut comes on the commission. While we distribute insurance products, and I think different products have different rates, like term insurance to health insurance, I think would have different rates of commission. And similarly, I think for the non-life product as well. But more or less, I think one understands that even if I think it is a 5 to 6% cut in the commission, it could have an impact. But at the same time, I think one could possibly ask for certain amount of, I think, extra benefits which otherwise insurance companies would pass on to the distribution agencies, including brokers. So we'll have to wait and see. I don't think that it is easy to immediately calculate on a one scale the entire impact for either the distributors or for the insurance companies. Maybe what they adopt and what they bring it down to, I think it's required to be understood before making impact on before analyzing the impact on the profit performance of the company.
Okay, all right. Well, copper prices have surged close to around 4% overnight, and that's what's taken copper prices to multi-month highs. Now, the rally comes after Freeport declared a forced merger at its Grasberg mine, that's in Indonesia. Now, this is one of the world's largest copper mines. The Grasberg mine, with a production capacity of close to around 800,000 tons, ranks as the second largest copper mine globally and accounts for approximately, very, very roughly, 3 to 3.2% of the world's mine copper supply. Now, Freeport's force majeure, well, that declaration has led close to around a 4% cut in their copper sales volume guidance that they given earlier. That's what sparked concerns with regard to supply constraints. And remember, this follows the earlier disruptions in September when Hudbay Minerals copper mine in Peru that had faced operational challenges due to the political unrest, further tightening the copper market. Now, after 2 years of relatively subdued performance, copper prices actually have made a comeback with more than 20% gains in this year itself, that's 2025. Meanwhile, silver prices have also surged, hitting the highest levels we've seen all the way since 2011. That's what's reflecting a broader strength in industrial metals as well. So silver has moved up, copper as well has moved up, and the only equity play on copper price move is Hindustan Copper, while Vedanta, via Hindustan Zinc, that's the only equity play on silver prices. So explains why these stocks up and about in today's session. Well, Deven, any view on both these two names? Hindustan Copper, 2 weeks ago, we had explained about as things were under some pressure, in terms of supply. The management came out there, they gave a big, broad guidance. The stock, I remember, was 270 rupees. Today, it's up close to around, 6-7%, and it's holding around 330 rupees. So in a matter of 2 weeks, this stock is up close to around 20%. What's your view on Hindustan Copper? I've seen in the past, it's a little tricky one to play it, but it's the only play you can make in terms of copper price moves.
Yes, Nigel, absolutely. I think the twin impact, I think, which as I see it for the company, on one side, I think the volume growth impact of around 15 to 20% expected in the current financial year because of the larger amount of throughput that they are processing. And on the other side, with the surge in the copper prices, I think they are expected to see even further growth. So volume-led growth on one side, price-led growth along with, I think is basically creating a good music to ears as far as I think the profit performance of the company is concerned. Whether they unilaterally passing on entire price rise, I think, to their customers or certain contracts, I think, which are driven by the price, I think is something which they are not passing on completely, remains to be seen. But overall, I think with a lag effect, certainly I think they would be in a position to pass it on. So in the full year, I would expect that I think along with 15-20% growth in the volume, along with that, I think the price impact should have reasonably powerful numbers coming up at the bottom line level. Again, I think no prediction because it would result into speculation for that matter. But believe that I think tailwind remains absolutely very strong for the commodity as a whole in general, including industrial commodity as well as the bullion commodities.
Okay. All right, Devin, thanks very much for being with us this afternoon. Really appreciate your views and your time. We do have to take a quick break on that note. We'll come back on the other side and we'll keep the market conversation going. Nikhil Ranka of Nuvama will join in with some perspective. Welcome back. It's that time of the day when Hormuz gets us all the action, the movers and shakers of the day, and everything that's moving beneath the surface as well. Hormuz, what's on your list?
Beneath the surface have been auto ancillaries all through and through this week. And every single day, there is some or the other name that puts its hands up and says that, okay, well, it's my turn to be under the spotlight today. Today's stock on the auto ancillary space is TVS Electronics. And today the stock is up 17%, but in today's episode of I Have Played This Game Before, the stock was up 10% the day before as well, and was up another 20% last week as well. Take a look at the volumes as well. They have increased every single time the stock has gained. On the last week, it was up 11 lakh shares. The day before 18, and today we've already seen close to 23 lakh shares that have changed hands. Now these 23 lakh shares are also very, very high compared to their 20-day average of around about 1.8 lakh shares. And today's stock, of course, is trading at a record high in today's session, and as a result of which it's up 56% in the month of September, marking its best month since September of 2017. And it's also turned positive for 2025 courtesy this rally that you have seen in the month of September, and since the start of 2020 the stock has been up almost 6x. Max India is the other one, another double-digit mover today. It is the biggest single-day gain that the stock has seen since October of 22. Volumes are the highest since July of 21, and today's session we have had 40 lakh shares being traded. That's not it. The 20-day average here is just 30,000 shares. Now, as a result of this move, the stock has also broken above its 200 DMA at 209 and the 50 DMA at 213. Still an underperformer this year, down 9%, but has delivered positive returns in all 4 years previously since its listing. A pharma name making it to the list today, Solara Active, they snapped a 4-day losing streak today. It's still significantly off the highs of the day because at one point the stock was up almost 10%, but the volumes continue to remain very strong. We have had over 9 lakh shares that have been traded so far. The 20-day average is only 90,000 shares, and it's taken support at its 50-day moving average of 646 and has rebounded from those levels. Now, the stock has not had any returns in 2025, absolutely flat, but the stock had doubled last year. And lastly, of course, Hindustan Copper, that's been in the news all through the day. Fifth straight day of gains for the stock today, almost 20% now in the last 5 trading sessions, and it has declined only 4 times in the last 4 weeks has Hindustan Copper, and we have had over 5 crore shares that have been traded today, and the 20-day average here is only 80 lakh shares, and the stock is up 43% this month so far, making it the best month the stock has had since December of 2023.
Yeah, copper seems to be now joining the precious metals bandwagon. It's becoming precious, at least copper and copper-related stocks for sure have really started outperforming. Fantastic numbers there. Thank you so much for that, Hormuz.
So gold is doing well, copper is doing well, silver is doing well, Bitcoin's doing well. What's not doing so well is equities, right? That's the only thing which is not doing so well. So we went up 1,000 points and we've retraced 500 points. And now as we speak, we even breached the 20-day moving average, which was about 24,940.45. So we're trading below that level, extending its fall, 125 points gone. Nikhil Ranka, CIO, Equity Alternatives, Nuvama Asset Management is now joining in. Thank you very much, Nikhil, for joining in. In this sideways grind, what fresh positions are you taking now?
So, Rima, I would say markets are basically looking out for triggers. If you take the precedence of other emerging markets, India has underperformed MSCI Emerging Market Index by almost close to 25% this year. And if you look at other emerging markets, a rally has started whenever a trade deal has got finalized with the US. Because then there is certainty, people will fine-tune their earnings estimates, and accordingly, once the uncertainty is out, those markets have performed. In the case of India, very specifically, 2 things have happened. One, we have not yet been able to finalize the terms of the trade deal. And the point is the time is clearly running out because Christmas is the peak season for US, and if we are unable to do it in the next 2 months, for a lot of the exporters on the textiles or the garment side, the peak season will be behind them and this year will get washed out. So my sense is for the markets to break out of this 24,500 to 25,500 range, we will need some sort of triggers in the sort of finalization of tariffs with the US, and then a risk-on rally should come through. Even in terms of valuations, if you look at it, although we would have seen 1 year of time consolidation, On an absolute basis, on FY27 earnings, we are not very cheap. We are still closer to 19.5 times FY27 earnings, which is where the median multiple is. So it's not that we have become extremely cheap on valuations in that sense.
Nikhil, hi. You've had a cautious view, and I think what you're saying is that return expectations themselves need to be reset to perhaps 10%, unlike 12, 13, 14% that we're used to expecting from equities. So, Nikhil, just tell us, I mean, since you have a more cautious stance and you mentioned some of the other facets about, for instance, tax collections maybe running behind estimates, how should one position the portfolio then? Are you cutting back from positions on the capex side of the market? And if yes, in what part of it? I mean, for instance, defense, look at it, HAL today. They're still announcing mega order wins. On the shipbuilding side, big announcements coming in from the government. So where are you cutting back on the capex or industrial side?
So if you actually look at the fiscal match, at the start of the year when the budget was announced, the direct tax collections were pegged at close to 25 lakh crores, which meant close to 12-13% growth for FY26 over FY25. If you look at the first 6 months of the year, we are tracking somewhere close to 8% in terms of direct tax collections. And assuming that, we continue with the same number for the rest of the year, you could have 3-4% slippage on the overall growth of tax collections, which would mean that there could be 1 lakh crores of hole that comes from the direct tax collection side. On top of it, we have the GST cuts that have been announced and got implemented from 22nd September. If you look at the government estimates itself, the number was put somewhere closer to 45-50,000 crores. So if you put together 1.5 lakh crores of revenue deficit, then we are looking at close to 40 bips of additional fiscal slippage for FY26. Now, there are two ways to do it. One, government increases borrowing, which would mean that there will be crowding out in the second half, which could put pressure on yields. Or the other way to then do it is cut back on the capex side of it, so that 10.5-11 lakh crore number, if there's some sort of 10% slowdown in that, then probably you will be able to manage the fiscal deficit much better in that sense. So therefore, my sense is there could be some sort of pressure on capex names as we move into later half of the year if the government spending doesn't come through. And therefore, my sense is given the rally that we have seen in a lot of these defense names, this could be an opportune time to take some profits in those names.
Hi, Nikhil. Good afternoon. Good to see you. Nikhil, what's the view on tech? They were bottoming and tech was said to catch up. But then Mr. He is having some issues with that H-1B visa. Well, most sell-side notes suggest that it's not going to be such a big impact. We have a lot of companies as well that joined and said it may not be such a big impact. The problem is and that's why the index itself is for this week. Do you think you would be looking to buy into this dip, or do you think there's too much of uncertainty and no growth, so you'd rather stay away?
So Nigel, if you put 2-3 things have happened for tech. The first is, the impact of AI in that sense. If you read some of the research reports that have come out, what they have basically put is that there could be 300 bips of deflationary pricing pressure on tech because of AI. That is one of the headwinds. So you will have to have much more volume growth to compensate for that. The second part is if you take the H-1B visa impact, the number is close to 1 lakh crores, but typically the tenure is close to 6 years for an H-1B visa. So on a per year basis, the impact is just $16,000 and the numbers are very small. So if you look at, the commentary from a lot of companies, nobody is expecting a hit of more than 50 to 100 basis points on margins because of the H-1B hike. And some way they can mitigate through that through lower salary hikes for employees. However, the key concern that now remains for the street is after H-1B visa part of it, does it do something on the higher act? Because there the measures are much more draconian. He's talking about a 25% tax on outsourcing. So everybody is therefore waiting for the dust to settle to have some clarity on what shape the final tariff negotiations with the US takes place. because valuations anyways have become very, very lucrative now. Most of the names are trading 2 standard deviation below mean. But so to say, there's no trigger for the stock prices to move till we have clarity on tariff negotiations. So we will see a very decent rally. The same thing what happened with auto stocks post GST cut. The only event that we have to watch out for, when does the tariff negotiation come through with the US? And I think then tech will start performing.
You actually think this HIRE Act, which imposes a 25% outsourcing tax, will come into effect? Because we've had these threats in the past. They've been introduced many times, in some form or shape, but they've not been converted into a law or passed through as a legislation. Do you think it's different this time, given the tension between India and US? And finally, after you just wrap up the discussion on IT, if you had to pick one sector as a secular trade for the next 3 to 5 years, which you're most bullish on, which sector would that be from here on?
So Rima, if you look at it, in the initial 3-4 months when this tariff thing was happening, services were kept completely out of the gamut of tariffs in that sense. And then suddenly we had this H-1B visa issue coming up. And then that created a sort of uncertainty for IT names. And then, talks of HIRE Act also started coming. Given the way situation has been so fluid in the US in the last 5-6 months, you cannot rule out anything completely, I would say. And that is exactly what the street is also getting nervous on. I would say this will be a less than 20% probability event that something of this sort comes through. Because, the margins for most IT players itself is in the range of 12 to 14%. So if you start putting a 25% tax, ultimately, it will be the US companies who will have to bear that. There's no way Indian companies can absorb that sort of cost hike, which would be detrimental for, jobs over there as well. So my base case is that it will not come through. It's only the uncertainty which is keeping the valuations a bit capped for IT companies. Given the way, things are panning out on the global side, I would say cement is one sector where, we've seen sort of GST cuts happening, almost 30 rupees of reduction per bag should happen. And that's one sector which is completely insulated, so to say, from the global uncertainties. So in this sort of scenario, I think a lot of fund managers would want to hide in cement. And my expectations is that sector should do well over the next 2-3 years. We are very clear, given the way consolidation has happened in the industry. The industry is now 60-65% in the hands of 2 players. Pricing power will come for cement companies, and what we are seeing today, closer to 800-900 rupees of EBITDA per ton, that should move closer to 1100-1200 rupees over the next 18 to 24 months.
Okay, all right. Nikhil, thanks very much. Great perspective. Good to have you on the show today. And we look forward to more conversations. Thanks for joining in. Well, with that, just a quick glance on the market, because the weakness is really telling. Look at this. And now the market's picking up momentum on the way down. So the 20 DMA is gone, the 50 DMA is gone, and now the fall is accelerating. It's a 160-point downward dive. And now the bulls are, the fight is around 24,900 now, not even, 25,000. Good time to ask Nigel what's happening in the F&O market. Not a great afternoon, Nigel, from the bulls' perspective.
Well, that's right. What's happened in the last couple of hours actually is that the Nifty Bank that is actually holding one end up, that's given away the advantage. And when the Nifty Bank falls in that sort of a manner, it's made a lower yet again. And that's the big worry, right, from a bullish perspective, because tech is not performing. You will be counting on the Nifty Bank, and that as well has given away. And as you said, just in the last 15 minutes or so, the Nifty that was at least managing to defend the 20 DMA, that's broken, and now it's broken decisively. One element that could be playing out today is the Sensex weekly expiry as well. The volumes are not as high as what we see on the Nifty, but it's still closer on 20% or thereabouts. So that could be another additional reason why we saw a sharp dive, because today is the Sensex weekly expiry. Moving to the Nifty options day, the 25,000 call, massive writing is what we're seeing out there. Take a look at the premium, that less than half in today's trading session itself. The 25,100 call as well, the premium at the start of today was around 110 rupees. That as well is less than half of what we saw at the start. So clearly there is aggressive writing that we've seen out there. While now all hopes are on this 24,900 put. it's seeing a good amount of open interest build up. The premiums around 50 to around 60 points or thereabouts. So, you'll have to see whether or not we can defend the lower marks. That's 24,850. But otherwise, the structure is broken. When 20 DMA gets taken out in this sort of a manner, that's a bit of a problem. Let's see what the final 30 minutes does hold for us. But otherwise, we need to cross that 20 DMA yet again and try to end above that mark. More into stocks that are in focus. Vedanta, that's moved up. Fresh buying is what we're seeing. Massive open interest built up out there. On Keynes, we're seeing a bit of a short covering bounce that's played out. Remember, there was a resignation at the top. Then there was big open interest build up. Now, in today's trading session, there is some roll as well that we're seeing. And 18% is what we're seeing in terms of sharing. So that's another stock. And finally, a likely F&O ban exit is HFCL. The last time I checked, the open interest, as a percentage of the MWPL has come down to 79%. It needs to breach 80% to come out of the F&O ban. So I think this one should probably come out of the F&O ban. Back to you.
Thank you very much for that. We will slip into a break. On the other side, we'll get you a check on dealing rooms are saying in our segment D Street Chatter. Stay tuned for that.
Welcome back. Well, as we speak, the Nifty is down close to around 170 points. And the way we have collapsed, that's a bit of an issue. But there could be a Sensex-related weekly expiry as well that's playing out. That said, it's that time of the day where we get to D Street Chatter. Nimesh is with us. Nimesh, disappointing trading session, right?
Absolutely. And, I was given a sense that there is a small MOC basket selling. But, this kind of an impact, I was not sure we'll have in the last 30 minutes of trade. But Having said that, there is an impact for sure, and technically now it's looking weak as well. I've been saying this for a while that 24,950 is a very crucial support. We're trading just below that level. So if the closing is below those levels, probably will open up more downside for many stocks and also. That's overall feedback. Flow, again, a bit of negative bias is what I understand. But as I said, there is a MOC angle to it. So numbers may look a bit large in today's trading. The sector which is doing well is basically metals. And that's because of strong metal prices globally. Global cues are quite strong as well. And hence that's having a bit of impact on the Indian metal names as well. So that's playing out. But as I said earlier, right, 24,950 is a crucial level. So another 20 minutes to go, but a close below those levels can technically mean we are weak, and then it will open up for further selling as well.
Well, that's right. And, there's no big recovery that we're seeing whatsoever. So let's see whether there's a fight in the last 15 minutes, but otherwise it's going to go down as a weak close. Individual stocks, what are you tracking?
Well, so as I said, there's a bit of interest back in metal names. So Vedanta is the first stock on my list. Been buzzing in trade today. Volumes are also on the higher side. There are very strong buy flows from larger HNIs, and I understand specifically a couple of large HNI groups are quite active as well in Vedanta buying of late. So that's the first name. Second stock is PNB Housing. This is the only stock which has consistently outperformed in the housing finance basket in the last many weeks, and largely on the back of buying flows. I understand one domestic mutual fund is an aggressive buyer, and of course for PNB Housing, the appointment of the new CEO will be the next big trigger to watch out for. So that's the trigger there. And the last name is Thyrocare. I generally don't miss out on at least highlighting one stock where there could be a potential block. Thyrocare is an indication that maybe a large block can come, but maybe not very soon. But there is some works as far as a large block in Thyrocare is concerned.
Okay, all right, Nimesh, got it. Thanks. Yes, indeed, a disappointing session, the manner in which the market has fallen. Actually, the one space, there are very few today, the one space that's managing to buck this trend, one is metals, the other is defense. Speaking of defense, just saw that news flash out there, that mega big order over 60,000 crores finally has gone HAL's way, and this is for the procurement of 97 light combat aircraft. We have Parikshit joining in with the details. The market's been excited about this one for a while. Parikshit, fill us in.
Well, on the 19th of August, the government had given an in-principle approval to this this deal, and now a commercial contract has been inked. This is a contract worth 62,370 crore for 97 LCA Mark 1A fighter jets, and this is excluding taxes. We believe that the final deal would be valued at around 67,000 crore rupees. Having said that, the delivery period would be 2027-28. That's when the first fighter jets from this order will be delivered to the Indian Air Force, and then the deliveries would be completed over a 6-year term. This will have an indigenous content of at least 64%. 67 additional items will be included over and above the previous order for 83 LCA Mark 1A Tejas fighter jets, which had been placed in January 2021. This aircraft will be equipped with Uttam active electronically scanned array radar. It'll have Swayam Raksha Kavach and control surface actuators. So the government is trying to give it a lot of indigenous content, indigenous weapon systems, protective shields, to make sure we are self-reliant in case of any kind of future conflict and wars. The government had earlier signed a 48,000 crore contract for 83 Tejas fighter jets in 2021. Those deliveries have also been delayed, predominantly because of the delay in getting the jet engines from GE in the USA. Now, with jet engines coming from GE and that supply chain stabilizing, we believe that HAL will be able to deliver the first 2 jets in in October 2025. This will be from the original order of 2021. Let's see how HAL is able to stabilize the supply chain, stabilize its production line, and how soon we can get more fighter jet engines from GE, and that will really help us boost our domestic production.
Absolutely, and that ramp up and that eventual, the rolling out of those planes is what the market is pinning its hopes on in terms of just better execution, better P&L eventually as well from these large orders. Thanks for that, Parikshit. Very helpful context as well there. So the second contract going HAL's way, even as it finally starts to roll out, that's next month, as Parikshit is saying, the deliveries of these LCA aircraft from the first order. Okay, with that, let's turn the spotlight on the currency, which has been making headlines with its weakness. In fact, the rupee hasn't, done too well, obviously, this week. We know that. It has outperformed most Asian currencies, remaining flat to strong versus the dollar. This is at least, earlier this week when it was just a one-way fall coming through. We've got Lata joining in with some perspective. Lata, what are dealers saying now?
Well, the important point is the rupee stalled its fall. compared to earlier this week when we saw 88.79, almost 88.80. Today it remained firmly between 88.6 and 88.68. Yesterday's close was 88.69. So at no point was it weaker than what it was on Wednesday or any time earlier this week. Sharp contrast. In fact, even if you compare to other Asian currencies, you saw a reasonable weakness between 0.1 and 0.7% fall. If you looked at the ringgit or the Filipino peso or at the Thai baht, the rupee was an outperformer even on those grounds. And there were reasons to fear an underperformance today because crude is at its strongest in several weeks. And the dollar index also is, DXY is inched towards 98. So both those gave the impression in the morning that the rupee will have another bad day. It didn't. And I think the entire credit should go to that one man who has $700 billion in his pocket. And, I mean, the RBI, it has intervened rather liberally on Tuesday and Wednesday. People don't want to get hurt now. Short positions, people were short on the dollar above 88.45, thinking it won't go there. And those shorts have already covered their positions. And hence, fresh speculative shorts against the rupee looks like have not been taken because of the presence of the Reserve Bank. We have to wait and see. There are, in fact, actually a lot of people who even think fundamentally most of the bad news is in the price. They are surprised that the rupee even came close to 88.8, etc. They expected that a little above 88 was all it would be, maybe 88.15 or thereabouts, and then it would start strengthening. So there isn't any fundamental support for the rupee at these levels. There will always be speculative push if the mood is bad. It's difficult to say that the worst is over, but it does look like people are not taking pot shots on the rupee anymore.
Okay, all right. Lata, thanks very much. So it seems at least the speculative element has been kind of put to rest with the RBI intervention. Got that point. Thanks very much for joining in. Well, with that, let's shift attention to the shipping space, which has been in sharp focus as well. Remember, the cabinet has approved shipping and maritime projects worth almost 70,000 crore rupees. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crores. The government also cleared a maritime development fund worth 25,000 crore rupees. CNBC TV 18 spoke with the shipping secretary to understand how this will aid India's shipping sector amidst global headwinds. Listen in.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the shipping under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards, so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them.
All right, and now Ria joins in to decode the impact of this development. What's the expected, outcome out here? Ria, take it away.
Well, yes, this nearly 70,000 crore boost to the shipbuilding industry. Let's take a look at the impact of this. First of all, this will support an overall investment of around 4.5 lakh crores over the next 10 years. We can also expect a shipbuilding capacity addition of 4.5 million gross tonnage, which also has the potential to reach around 8.2 million gross tonnage going forward. Specifically, the Maritime Development Fund, this provides long-term financing for the sector. It reduces the effective cost of overall debt. project, and it also improves project bankability. In terms of the shipbuilding development scheme, this supports mega shipbuilding clusters as well as infrastructure expansion. Overall, we can also expect some additional port capacity of 250 million MMTPA as well as additional vessels over 2,500. Now, let's just take a look at what this means for the overall shipbuilding industry. As of March 2024, the Indian shipping tonnage stood at around 13.66 million gross tonnage, and Indian flagged ships carried only 4.1% of India's overseas trade in FY24. India's share in the global shipbuilding capacity was also pegged at less than 1% in FY24, and the global leaders include China, South Korea and Japan, which together control around 93 to 94% of new shipbuilding tonnage overall globally. So India aims to reach around 5% of global shipbuilding capacity by 2030 and also aims to develop around 10 shipyards by way of public-private partnerships as well as international collaborations. And these schemes that were approved yesterday will aid the sector overall. Stocks were reacting positively throughout the session, but as of now, only Cochin Shipyard is in the green, holding on to some gains, whereas Mascon Dock and Garden Reach have slipped into the red.
Okay, all right, Ria. Thanks a lot for that. By the way, it's not all gloom and doom, actually. There are a few stocks that are doing well, so we must pull that up. Adani Power, the stock has now moved to the high point of the day. Pull up the intraday chart of this one up. Paradeep Phosphates, the stock was trading in the red. It's already had a big run. Now that stock, in fact, has spiked up yet again, so it's done a bit of a U-turn from the day's low. We have Adani Total Gas as well. That's up, from the red, it's moved into the green. So select stocks are still doing pretty well. Amrish Palika, market expert, joins us on the show. Amrish, let's throw the field open. First of all, what's the one stock you have on your radar?
Good afternoon, Nigel. The stock which I have on the radar is Aadhar Housing Finance. It's the largest housing finance company in the low-income housing space. 26,500 crores of AUM, more than 3 lakh loan accounts. They have 591 branches across 22 states, so well spread in India. Asset quality has consistently improved. Gross NPAs have come down to 1.34%. Net interest margin is 8.8%, which is decent. And the loan book is very well distributed across the country. I mean, no single state has more than 15% exposure, so the concentration risk is low. And if you see the last quarter's earnings, it was strong growth. PAT increased by 19%. AUM growth was about 22%. Disbursements grew by 32%. And management expects to have about 750 branches by FY28, which, overall 18 to 20% per annum growth as far as disbursements go over the next 3 years. AUM expected to grow at 20 to 22% CAGR. So I'm expecting an EPS of about 32 for FY27. With this, my target price is about 640, which is close to about 2.5x book value for FY27.
Okay, all right. Amrish, stay on. We'll have more questions for you in just a bit, but we do have to get into a very quick break. Back right after this in a jiffy.
Welcome back. Well, Amrish Palika is still with us. Amrish, a few of these fancied sectors, they are suddenly seeing some selling. Power grid is down close to around 3%. The street is getting a little bit cautious with regard to capex spend. They're saying that the government has showed their intention right now. Last few years was capex. Now they're more consumer driven. They're focusing more on consumption. So because of that, cement related names, Dalmia Bharat is down. You have, a couple of other, power grid is down as well. Any of these are presenting a buying opportunity?
I think in the power space, there's a buying opportunity. But when we talk of cement, the cut in GST is not going to increase the consumption of cement directly. But I think it is clearly a positive for the real estate space, and especially those in the affordable housing space, because that's where it's going to make at least some amount of difference. By rough calculations, it should reduce the cost of construction by about 30 to 35 rupees per square feet. And that makes a difference as far as the affordable and low-cost housing goes.
Amrish, this news surrounding Karnataka, the draft rules to auction liquor licenses. Are there any implications for liquor, stocks like the Alcobev stocks like United Breweries, United Spirits? I mean, is there a possibility that because the auction license is going to cost so much more, there will be a cost increase and consumers may need to bear the burden? And that conversely could hurt the volumes. I mean, is that a way to think about it? What are the implications to your mind?
No, see, the cost of licenses will surely increase the cost of distribution. But then with so many new outlets being opened and new restaurant and bar licenses being given for liquor, I think in the longer run, it should be positive for the liquor trade, because whatever said and done, the increase in number of your distribution points clearly should be positive for the trade. So I'm quite surprised as to why most of these stocks have corrected today.
Okay. Amrish, HAL, we were just discussing with Parikshit that LCA order, mega order, 62,000 crores, nearly 63,000 crores. It's already come through. How do you find the stock now? And are you expecting a bigger pickup in earnings?
See, it's just not HAL. I will talk about defense space overall. I mean, I think execution is still going to be a worry going ahead. I mean, last time there was an issue with Tejas, HAL blamed GE Aerospace, and rightly so. But then the issue is the supply chain. I mean, there can be execution issues going ahead. And now we are talking of shipping and maritime. There's 70,000 crore allocation by the government. Yes, sentimentally very positive. It's just like those huge orders which have been coming to these shipping companies and yards. And the markets have already discounted that, and because of which the stocks have performed extremely well. But like I said, construction of a new shipyard is going to take a decent amount of time. And there are hardly any brownfield shipyards where expansion can happen. It's going to be the greenfield ones, and that's going to take time. And additionally, once you set up a greenfield shipyard, you also require ancillaries close by. I mean, all those issues no one is really talking about. So over the next 2-3 years, I think execution will become a major issue for all these companies.
Thank you, Amrish, for that. We'll come back to you just after this short break on Markets Forward. For now, the markets have extended the fall to below 24,900, and that seems to be where we'll close this Thursday's session, down for the 5th consecutive day. And today, the losses accelerated in the last 2 hours of trade. Particularly, look at that Sensex chart. The Sensex nosediving nearly 600 points, 0.6-0.7% gone on the benchmark indices. Mid-cap decline was in step with the frontliners. Advanced decline ratio had nearly 2,000 stocks on the way down. And the big drags came in from Trent, Power Grid. Tata Motors got hit on the back of that cyber security incident, which was not insured. IT continues to drag lower. Asian Paints, Shriram Finance, NTPC. Lots of losers. On the way up, you've got this BEL and then a couple of these commodity plays linked to copper.
Yeah, absolutely. I mean, and Hindustan Copper was definitely one of those names, 5-6% on the higher side, doing really well. On the gaining side, I mean, you had names like NewGen and NetWeb, even eClerx for that matter. These were some of the stocks that managed to buck the overall weakness in the market today. Yeah, those are some of your green ticks. But otherwise, I mean, it was a lackluster session for many stocks. Dalmia Bharat with some issues, cropping up on the regulatory front, and a fair amount of weakness. Otherwise, pretty much across the board today. Mid-cap market losing quite a bit of ground. And you had well over 2,000 stocks declining on the NSE today. So not a great day for the broader space as well. Well, with that, it's curtains on this edition of Closing Bell. Many thanks for watching. Do stay tuned. Markets Forward coming up next.
A sharp fall in the Lal Street in the last 15 minutes sees the market fall for the fifth straight day. The Nifty ends below 24,900, dragged lower by auto, IT. Barring metals and defense, all sectoral indices end lower. In fresh trouble for Tata Motors arm, JLR, it reports suggest that the automaker failed to secure insurance against the cyber attacks in time, and this could spell a £2 billion hit. Tata Motors, in a statement to the UK Parliament, says the group is in touch with JLR to offer advice and support, adds its sound position to secure additional short-term liquidity. The government's 70,000 crore rupee shipbuilding scheme will build local capacity and bridge the gap in acquiring ships overseas, India's shipping secretary tells CNBC TV 18. He expects 1.45 lakh crore rupees of investments in India's shipping sector.
Well, hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vamakshi Thoria, and with me is my colleague Reema Tendulkar. Hi Reema, today wasn't such a great day as we've been seeing over the last couple of days. The Nifty continues to trade in the red. I believe it's the 5th consecutive day of losses for the benchmark index.
Indeed, it was a tough Thursday, and it's been a tough run, a weak run for our markets, down for the 5th day in a row. And in the morning we had a flat start, and then we were hopeful that 25,000 mark will hold. That gave way, and towards the end, in this late sell-off in the last 1.5 hours, even 24,900 was breached on the way down, and we ended with a cut of about 166 points. So basically what happened is markets from the third week of August saw a rally of about 1,000 points. From 24,400, we rallied to 25,400. It was a clean 1,000 point swift rally. And now with today's fall, we've given up close to about 500 points off that level, a little more than that, in fact. So more than 50% of the recent rally has been retraced. Now we find out today we breached the 20-day moving average. Is there more downside in store? And there were so many stocks which were weak. ITs continue to reel under pressure. In fact, the Nifty IT index is now down close to about 5% for the week. Autos have seen some amount of profit booking. So if you pull up the losers list, it's Tata Motors right on top. That dragged the markets. But even some of the other auto names were a bit subdued in trade. But let's talk stocks.
Well, absolutely, Reema. On to our first segment of the day then. Gaurav is here from the Big Wall with the top movers and shakers of the day. Gaurav, over to you.
Well, let's talk about movers, and in a positive way, because we've got NetWeb, eClerx, Navin Fluorine, Intellect Design, all of which actually gained more than 3%. Other than that, let's also talk about Hindustan Copper. Now, this stock increased almost by more than 5%, and the reason being that now the copper index prices, there we saw copper prices reaching 6-month high level, and this is because analyst warns that in 2026, the output from one of the world's biggest mine of copper will potentially decline almost by 35% as compared to the estimates. Other than that, Newgen Software Tech, here also we saw a good set of number in terms of the stock move because UK arm has agreed to cloud hosting and software contract with TCS. HL also shown some kind of uptick, and the reason being that Ministry of Defence signed 62,370 crores deal with HL for multiple aircrafts. And lastly, let's also talk about Credit Access Grameen. Now this stock, it reached its all-time high level, 52-week high level, and at the same time it also increased more than 1.5% today. Let's also talk about some of the losers. We've got Tata Investments, ABFRL, RK Forging and Home First Finance, all of which declined almost